Welcome back to the Stocks Update. Great to have you here once again for another deep dive into the markets. Today, we're talking about Lucid Group, and boy, it's been an interesting ride. The stock ended the day with a 1.72% drop, and while it had been building some strong momentum earlier in the session, it unfortunately couldn't hang on to those gains into the close. I genuinely thought we'd see it finish in the green, but the broader market pressures dragged it down. Lucid's daily range today was between $2.06 and $2.35, so it was definitely moving, but more importantly, there's a lot going on behind the scenes that's worth unpacking. From a mix of institutional activity to increasing short interest and suspicious trading behavior, this stock is becoming a battleground. Let's get into the meat of what's happening here. Just like yesterday, there's been a wave of unusual trading activity, and it's happening in both directions. On one side, short sellers are doubling down, increasing their positions with force. On the other, we're seeing heavy buying volume from institutional players, so it's a tug-of-war situation. Neither side is giving up, and that dynamic continued throughout the day. In fact, broader reports have surfaced showing that short sellers are targeting large-cap companies with market caps exceeding $1 billion. Just this week alone, these shorts have made over $54.9 billion. But interestingly enough, Lucid wasn't one of their successful targets this week. Despite the red day today, Lucid ended the week with a gain of 2.91%. That alone is quite impressive, considering the broader market conditions. Let's give a little shout out to that in this kind of market. Ending the week green is no small feat. Now, for those of you who tuned in yesterday, you might recall I mentioned that the short interest had climbed by around 7.5 million shares. During pre-market trading today, there was an additional increase of 2 million. By the end of the session, the number climbed again up by another 4.07 million. What makes things even more interesting is the cost to borrow minimum turning negative. Yes, you heard that right. This basically means some brokers are paying clients to short Lucid. That's not a common occurrence and suggests there might be manipulation at play. It's not just natural market action anymore. Someone, possibly brokers, is trying to create a narrative or influence sentiment around Lucid. And you'd think with that kind of short activity, the stock would have tanked significantly, right? But that's not what we're seeing. Despite all this pressure, Lucid is still attracting significant institutional interest. There's no clear news catalyst for this buying, but the dark pool data speaks volumes. Over 1.3 million shares, another 1.16 million, and just recently, 1.22 million, all of this volume flowing through off-exchange platforms. These are large block trades typically done by institutional investors. So the question is, why are big players buying Lucid so aggressively when retail sentiment seems mixed and short interest is surging? Even on social media, there hasn't been much buzz. But what I have noticed is that Lucid has been ramping up their marketing efforts. We've seen several YouTubers showcase the Gravity SUV recently, and that New York promotional event got decent attention too. That might be contributing to increased interest from institutions. Now, while all this is going on, something else happened today that might have longer-term effects not just for Lucid, but the entire market. Jerome Powell made a statement that essentially put a damper on hopes for a May rate cut. Investors were hoping for a more aggressive move to stave off recession fears, but Powell said the Fed will continue to monitor the data instead. That kind of wait-and-see approach isn't ideal. Historically, the Fed has been more reactive than proactive, and by the time they decide to move, sometimes it's already too late. That sentiment added to the market pressure today and certainly didn't help Lucid or any other high-growth stocks. It's wild because Lucid has this pattern every time they release positive news. The broader market seems to be falling apart. I've been covering this company for nearly 5 years, and it's almost comical at this point. For instance, I remember when the Public Investment Fund PIF and the Saudi government committed to ordering 50,000 vehicles with the potential to extend that to 100,000. That day should have been huge for Lucid. Instead, the markets were tanking, and the news got buried. That trend hasn't changed. Good news just doesn't get the traction it deserves due to macro conditions. Let's move on to the options market. Today saw $1.67 million in call premiums traded compared to $3.77 million in puts. Despite the higher number in puts, the overall tone was still optimistic. Around 54% of all options traded today leaned bullish based on the premiums paid. Between 11 o'clock and 11:05 am alone, we saw $1.7 million worth of contracts traded, many of which were neutral in nature. But still, it's telling large investors are making calculated bets on Lucid's future. Yesterday saw $10.9 million in option premiums. Today came in at $5.4 million. That's still way above average. Usually, we see about $1 to $3 million on a typical day. These numbers show that there's still a lot of attention and speculative interest around this stock. From a technical standpoint, Lucid is still trading below most key moving averages. That might seem bearish at first glance, but given how resilient the stock has been, it tells another story. It's showing strength despite the odds. The stock closed at $2.28, so it didn't quite break past that $2.33 pivot level. If it can push through early next week, we might see another attempt at a rally. On the flip side, $2.11 has become a strong support zone. The stock tested it and bounced, which is a good sign for bulls. Additionally, a large number of call options with strike prices of $2.50 and $3 expired worthless around 30K and 20K contracts respectively. That's just part of the game. Options are a risky bet, and expiration days can be brutal. We also got 2 new analyst ratings this week. Morgan Stanley's Adam Jonas, who has about a 48% success rate, gave Lucid a $3 price target. Interestingly, not long ago he pitched a bull case for $10, citing potential partnerships as the growth driver. That high target hasn't gone unnoticed. On the other hand, Benchmark's Michael Ward gave a $5 price target, although his success rate is a bit lower at 33%. Still, these ratings may have helped trigger some institutional buying. Analysts seem to like Lucid's delivery numbers and future potential, even if they're cautious in the short term. So, what's the game plan? Personally, I didn't buy or sell today. I'm sticking to my strategy. I'll only consider buying again if the stock dips back near $2 or slightly below, or if Lucid starts gaining traction from a solid gravity rollout. Until then, I'm observing. It's a volatile ride, no doubt about that, but that's part of the fun in being a Lucid investor. If you bought the dip today, give yourself a pat on the back. I've seen a bunch of folks on social media proudly claiming they loaded up. Let's see if it pays off. And I'll end on this. The cost to borrow minimum is still negative. That means someone like brokers is actively incentivizing people to short this stock. That's not a typical move. It tells me there's a bigger play in motion. Could there be some conflict involving brokers, the PIF, and Lucid? Possibly. Let me know in the comments, what do you think is going on behind the scenes? Why are shorts so obsessed with Lucid? And what's your take on these institutions loading up? If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.